Hi, everyone. I hope you're having a wonderful week. So this week decided we would cover both what the Indian tech market writ large and what FJ Labs is doing in India, given that we have a long history of investing in India, even though it's not the core, the main of the strategy. About 55% of our investments are in the US and 25% are in Western Europe and the Nordics, but about 5% of the investments are in India, and we have a long history of being operators in India through OLX, investing in India, and being close to the country. And so decided that this week we're going to cover both the state of the Indian tech market and also what our strategy in India is and why we are following that strategy. So with any further ado, let's get started. Welcome to episode 38, the state of the Indian tech market and FJ Labs strategy within it. So Luke, welcome to the show.
Thank you for having me.
So why don't we start with you giving us a little bit of your background and your particular connection to India, and then we'll get going.
Okay, happy to do it. So on my side, I come from an engineering background. I studied bioengineering in undergrad and kind of right out the gate went into the startup scene. So I worked for a company called bSwift, which was a B2B2C benefit enrollment platform in product, and saw that company grow from about 50 when I interned to about 450 when I left. And I got as close as I will ever get to working in corporate when Aetna came in and bought us for about 400.
1 second. I think we're having technical issues. Your sound dropped off for a second.
Sure. All right.
Okay.
Is it back?
You're back. Yeah.
Okay. So from there, I went to a fintech, which in hindsight, maybe we could have called it a Brex vertical for event spend management. In practice, we sold ourselves much more like a B2B SaaS. And so it took us a year and a half to onboard Apple, a year to onboard Dell, and really saw some scaling issues there. But again, really good learnings. And then finished my time on the operator side as a product manager for API integration and data visualization wrapped up into a P&L at a company called Yellow, which you could think of as for enterprise orgs, kind of handling everything from your first interaction with the recruiter, typing in your information on an iPad at an event all the way to getting hired. And so they're kind of had the fortunate opportunity to work on the API side and know that that's so core to businesses going forward. And so that brought me to doing an MBA at Booth, where I thought, look, I did engineering in undergrad. I didn't take any business classes. I need to kind of harden some of those skills and the network therein to go start something. And kind of now knowing in hindsight, I ended up interning for FJ along the way and said, look, you guys are raising a fund. You definitely could use some help, and tried to position myself into getting a role, and was fortunate enough for you to say yes to me and come out on the investing side instead of the operating side.
Yeah. So Luke is now a senior associate at FJ Labs, and so do you think you would go back and become a founder at some point, or do you think you're going down this path on the VC side forever?
Yeah. I've loved every moment of FJ Labs, so I can't say I'm thinking operator right now. I wouldn't rule it out, but I think, you've talked about it before. We have a unique role here where we can help with incubations and get really involved and kind of scratch that itch anyway, which has been fantastic.
Okay. So why India? Why are you the India guy?
Yeah. Really good question. So I think you maybe talked on here before about how we do offsites every couple of months. So like every 6 months we'll do an offsite. And so at our offsite back in January at Fabrice's lovely home in Revelstoke, we were talking about emerging markets and where we should be playing. And I said, look, we've invested in India historically. Of course, Fabrice with OLX had been there tons of time each year and had really built a brand and a name for himself. Why don't we look at the opportunity set here more? And so I offered to make a trip, stayed for 2 weeks, kind of did my rounds with Mumbai and going to Delhi and Bangalore and seeing the Taj Mahal in between. And after 2 weeks of meeting with founders and with investors, I came back blown away, and I was like, look, there's a huge opportunity. And so really over the last 6 months, we've continued to canvass the space. And as I said, continue digging in. And that's been the culmination really is today of saying, look, here's our thesis on a go forward basis. And we need to be having a much larger presence in the region.
Okay, so tell us about where we stand in the Indian tech ecosystem right now.
Yeah, so maybe real quick, I'll set the table with a small history, a very, very short history, a note on the tech ecosystem, and take things from there. So in terms of, very quick history, I think it's demonstrated well here of how the Indian government was reacting, and then you can use tariffs as a way to measure that. Back in the 70s, really almost a closed off environment, very large tariffs coming in. That evolved over the 80s, where you saw those significantly reduce. Think back to the 90s, where you outsourced mostly call centers and maybe some degree of tech if it wasn't core. 2020 or 2010s kind of started to evolve, and you saw more exports from an IT perspective, copycat models starting to crop up more and more. And then we've moved now into the 2010s and beyond, where you've said, look, there's a ton of unicorns on the rise. The growth has accelerated, and really we're at an inflection point. So I think it's super exciting from that point.
What's interesting is for the longest time, right, like the core story of there's some level of growth, there's a huge population, it should lead a big market, was people believed that, and yet when you looked at the outcomes, the numbers were small, right? Like the number of unicorns was low, the number of exits was low. So what changed?
Yeah, so let's get into that and why the ecosystem has changed. I think a fair point to start with is just the number of unicorn events. So really, 2021 was an explosive year, I think, in venture categorically, and we can talk about later why that might have been, a little bit of over-eagerness. But regardless, you see a growth over 2018 and beyond, which is where it gets super exciting. And even in 2022, we've minted quite a few new unicorns. And the reason for that, I think, is because the ecosystem growth and that flywheel is really starting to turn, right? So we've seen Entrepreneur First come in and open up an office. BNext opens up an office. So more accelerators on the ground. The government spend has continued to be quite attractive. And as we've seen some of these outcomes happen, a lot of angels reinvesting in the ecosystem. So Kunal Shah is probably the most prolific right now. It looks kind of like Fabrice Yor and Jose's early numbers. But, we saw Niraj from Spinny, who's on the show. Even he has 10 plus investments. So even some of these longer tail of angels coming in are really making quite a difference. And I think what that does is it lowers the barrier to entry for some of these startups to get that initial capital that, friends and family might not be able to provide. You get more of these ideas coming in. Stronger ideas means more global investor capital. As we see success, it begets more success. And I think maybe most importantly is you've seen way more folks who have said, look, I grew up in the culture of Zomato or Freshworks or Paytm. I can go do that myself. Give me some money and I'm going to go out and build the same thing. So I think that's been an underlying reason for it.
Yeah, it's probably something similar that happened first, in the US, where in New York, once you had the exits, like for instance of DoubleClick and Kevin Ryan, and so the top founders started reinvesting, it got that flywheel going. It created an example where engineers could go and work in startups rather than being at like Goldman Sachs, and that ecosystem blossomed. And we're seeing that frankly happen globally. And with just different time lags, and of course it's been happening in India with the first successful exits, which are leading to reinvestment.
Exactly, and I kind of bled into this slide, but basically there's a handful now of outcomes that you can do. You can go start a startup, join a startup, become an angel. The barriers to entry for all of these have lowered, is what it comes down to.
Okay.
And so let's talk a little bit more about where we're at today. And I'm a big Game of Thrones nerd. So winter is coming if it hasn't already arrived. You've got geopolitical risk in the region. We'll talk a little bit about China in a moment. But Russia and Ukraine, you've got rising interest rates in the U.S., which has a kind of an effect globally. And so a lot of these negative externalities, and that's manifested itself in how people are spending from a VC dollars perspective. So this kind of demonstrates quarter over quarter, we've seen quite a big fall off in investing. I think this number shows like 93%. I read another that was 82% for India. Globally, to give you kind of a benchmark, we're down 34%. We actually, in Q3 of this year, saw the smallest number of new unicorns since before the pandemic. And then to get a bit more specific on geos, Europe is down 44%, US is down 22%. So what does this mean, really? It's that there's typically a flight to quality. And, Jose has talked a lot about this. When you see some of these larger negative events happen, or if you see a global recession, which, for my working career, I was fortunate to only see a bull run, you see a flight to quality and you see a flight to things that people know. So a lot of those, exploratory dollars that we saw coming into the region, not just India, but Latin America too, have kind of pulled back and said, look, where can we safely deploy?
I think what it means is the U.S. funds, or maybe the European funds that were starting to venture out of the core geos, were retrenching to the core geos, and what you're left with are the local funds that are deploying local capital. And the good news in a way for India is there are those funds, or it's true for Brazil as well. It's less true for many other emerging markets where when the U.S. capital goes away, there's very little left.
100%. And so I mentioned China briefly, but I think this is interesting. So there's been spillover effects of this, the conflict more recently in China with their lockdowns. And so a cool story is Apple saying, look, historically, when we do iPhone production, we lead with China, then India will come in, they'll fill some stuff in. And more recently, they've said now it's not just the iPhone. We're going to have a strategy where we outwardly say AirPods and iPads and all of these other products. And so basically, this is just a microcosm of what we see happening on a go-forward basis. Is India is kind of coming into its own. It's much more primed to be able to handle the supply chain, the logistics, and the exporting piece. And we're going to just see a manifestation of that.
So I think that what we're trying to say is short-term, because the hot money flows are going out, the venture ecosystem is probably shrinking, but long-term, the overall mega trends are positive. One is people are moving their supply chains to India, and then two, I'll let you go on.
Yeah, and so no, you hit the nail on the head here. It's like a lot of the policy is really paying off for the Indian government, right? So they've internally pushed for self-reliance. They've said, look, every policy that we put in place, as you could see demonstrated by these dollars, is for growth. And so what does that mean? It means that manufacturing has increased quite a bit. The infrastructure isn't there yet, but every single city I visited was building new roads, building new tunnels, like really trying. But ultimately, that should lead to more jobs and higher salary, in effect, a much larger economy. And with that economy, larger spending power, which is, I think, one of the more exciting trends. So it's not all doom and gloom. There are some positives that despite the current state of affairs, it will continue to get better. And so maybe I can give one example of that is on the fintech side. So UPI is this, you can think about it like in Brazil with Pix, where UPI is a way for payments to be facilitated in a much more easy fashion. And we're seeing a lot more investment from the Indian government, not just on physical infrastructure, but on this digital infrastructure. And so what that means going forward is you could use UPI to have lower costs. And we've talked about this kind of writ large of that spread that people take kind of shrinking and shrinking and shrinking. Well, UPI says, great, it's basically going to be zero, but you could still build on top of us to create rails for credit cards, for saying, open credit between banking systems. And I think one thing that isn't maybe so fintech related, but is just interesting nonetheless, is this UHID, which says, look, I can take my health records from one provider to another on a go forward basis, which we don't even have here in the U.S. I'd love to see something like that. But at the end of the day, it nets out to better innovation, cheaper, faster.
Well, something like UPI actually would be amazing in the U.S. as well, right? Like currently there's the Visa, MasterCard like 2% tax on everything. And yes, it is the underlying business model for most of the neobanks, and it provides a viable business model for many fintechs. But at the same time, it's a massive consumer tax.
100%. And so kind of putting some numbers behind what I talked about is like real GDP per capita has continued to rise, almost like on a meteoric rise, right? But, what's also quite exciting is the amount of internet users, the amount of consumers, how much time they're spending on the internet. And what that means on a go-forward basis of saying, look, when we do bring that GDP per capita up, that's going to be a massive amount of consumer spend eventually. And so just to put, again, numbers behind UPI, already 21 trillion transactions. That's insane. And at this point now, over 4 million IT workers in India today. And so kind of along that trend, just one more point on it is, GitHub could be a cool proxy. This is some data from Lightspeed that they put together where 8 million already of the 83 million users on GitHub are from India. And something that's really cool is just to understand the rate of growth of those developers. So 40% growth from 20 to 21 for India versus 16% in China and 22% in the US. So not only a large number, but also growing at a faster clip. And ultimately, I think what that's led to is just a really cool venture ecosystem here. So with India, a lot of those dollars are going to consumer, and we'll talk about why we won't put as many of our dollars to work there, but still a ton to fintech, a ton to B2B commerce. And I think that'll be true on a go-forward basis too.
Yeah, speaking of, by the way, follow the dollars. Pankaj on LinkedIn is telling us that, Luke, great point about domestic capital in India. The number of domestic funds that have been raised over the last 12 months is record-breaking. And so as more and more capital is raised locally, it creates a more robust local ecosystem and less dependent on the tigers of the world that come in and fund the companies.
Yeah, I think that the funds 2 through 5 that were being raised at some of these funds have been some of the biggest to date, and that means a ton for the ecosystem, which is really cool. And so I think maybe we should talk about obviously where we're investing now that I've given you a picture of what we've been seeing. So on the left, you'll see kind of where we want to focus our time, right? So we've played this kind of picks and shovels category quite well. Of course, in the U.S. and trying to do the same in Europe and Latin America. Financial infrastructure, I think, is going to be massive. And then what does that mean for B2B marketplaces is kind of the story I want to tell. And then where we aren't is pure consumer tech. I'll get into this too, where real estate has kind of been an area that's lacked trust. There's been quite a bit of fraud, not something that's fully developed and baked. EV, I think, is probably 5 to 10 years away. Crypto, it's not so much that we don't want to continue investing in crypto, but it's been a very tough regulatory environment. We've globally looked at it as an infrastructure play type of thing. And then Fabrice recently wrote about kind of crypto-enabled marketplaces, which we're very much so interested in. And then B2B SaaS is just lower willingness to pay within the country. Typically has to have a very outward approach, initially launched in the US and in India, also in Europe. And then hardware is just something we haven't typically touched.
Capital intensive,
so
lower margin. It's just not our bread and butter.
Yeah.
And honestly, B2B SaaS neither.
Right. And so where we will be investing is the movement of goods. On your left, you see airports as major hubs, and on the right, you see some of the seaports, which I just think the visual is pretty cool. There's quite a bit here. And so I think that what we'll see is best in breed picks and shovels and the fintech rails together will help enable or create the next wave of B2B marketplace unicorns. And so what we've seen is some of these V1 players that went very horizontal, like a Zetwork or an Inframarket, we're now seeing some vertical, more specialized players come into their own, which we're going to see, I think, a massive proliferation of, as we already have with, I spoke to, 3-4 different chemical marketplaces that are all selling B2B, which maybe you wouldn't have imagined, or how we've invested in Rebus. There's also one doing the same in India today. So I think the underlying infrastructure being purpose-built for export will also help to create this other effect of the country raising GDP per capita overall, and then that eventually helping us to invest in consumer. And so on the consumer front, look, you see at surface level 1.4 billion people, and you go, wow, that's amazing. It's a massive market. This is going to be huge. But that doesn't tell the whole story, because there is a severe gap between the haves and the have-nots. Share of wallet is pretty tough to achieve, given the low level of salaries today, at least for the majority. And there's a vast divide between income distribution as well as disposable income. But that said, we could still be optimistic that this eventually will be really large. I just want to make sure we caveat that with look, even from a credit perspective, it's largely limited today. And so without that and without the higher salaries, how do you spend a lot of money? How do you get to trust? How do you get to high enough AOVs or fat enough margins? And so that doesn't mean we won't invest there ever. It just means we won't focus as much of our time.
What do you think is the right level of GDP per capita or distribution? When do you think we get there? Because clearly GDP per capita has been growing. The country is a lot wealthier than it was, a decade or 20 years ago. Hundreds of millions of people have come out of poverty.
Yeah, and so I think that we probably see another doubling in the next, call it 5 years. And at that point, I'll be saying, okay, I'm kind of licking my chops. I'm ready to deploy a lot of capital into the space.
Okay.
Yeah. And so let's start with picks and shovels. So I think, it's hard not to spend a little bit of time here investing in the underlying tech that will be, so to speak, the Atlas of India, or holding up everything, the weight on his back. And so here, I think we need to look at, of course, technology for import and export, but trade at home as well. And so we've seen a bunch of these flexport models, of which, one, there are many, but two, there are many different ways to play the category, both from a focus perspective. Do you do short tail? Do you do mid tail? This very, very fat long tail? Or do you focus on a particular vertical? So that'll enable movement of the goods both within the country and then outside of it with companies like Freight Wallet, which we've invested in. But many, many more to come. And we've played the space in the U.S., which I'll show in a minute, as well as globally, in a way that you cover a lot of those different slices that I mentioned. And so what's so nice about these businesses, super, super high degree of recurrence. Once you're on them, very, very hard to get off. And, I talked about consumer, these long tail of 40 million SMBs in the country are almost an extension of that. So we can play this in a way where you professionalize them, you help them to engender more trust, you get them to a point where they can more easily export, and it becomes a lot more attractive than just sales domestically for these enterprises. And so
I think we took out the slide, but exports of India are about 500 billion a year and have grown dramatically. And so enabling exports and exporters is a huge opportunity within India. And in general, the mega trend of digitizing SMBs and helping them professionalize their operations is another huge one, which is why you see the likes of Catabook, becoming very successful and playing a very big role in India.
100%. And so, I'd love for you to comment on this a little bit, but this is how, we're seeing some different sections that absolutely should exist in India. So everything from, on the left side of the screen, compliance from most likely a tax perspective. We did look at a couple crypto plays from a tax side of things, to waste, to really the bread and butter being supply chain and logistics here. And as I mentioned earlier, we've played some of the categories at different slices of doing the flexport model, doing ShipBob, doing Shippo for carrier shipping. But I'll take a quick pause there and happy for you to comment as well.
Yeah, no, look, the same nuances are going to exist in India, where you need the warehousing infrastructure, you need the last mile delivery infrastructure, you need the different types of freight forwarders. I mean, in fact, recently we spoke to a freight forwarder out of YC that was focusing on machine parts, which made a lot of sense. Valuation didn't make a lot of sense, but the team was great, the product and the company was great, and I'm sure we'll reconnect for the next round. So all of these different components are being built or going to be built the same way that they've existed in the US. So I'm not sure there's much more to comment other than to say that this is extraordinarily logical as things that need to exist as the country evolves. And just for clarification for the audience, these are the U.S. equivalents or global equivalents that we've invested in as FJ Labs. We're investors, I think, in 100% of these that should exist in India, and in fact, to some extent, already do exist in India.
Correct. Yeah, all of the companies all do the same exercise for the other two verticals. Are players that we've invested in ourselves. And so I think that moves us to fintech. So with the fintech, the trend number 2, think about it as making payments super easy, reducing friction of payments. Again, my nerd is showing this is now Lord of the Rings. So what do we want to do, right? So I think that cross-border payments will help unlock our B2B plays and obviously offer, to an extent, an opportunity to partner. And so that's kind of number 1. Number 2 is trade financing. And so we've already talked about enabling the SMB. Well, how do you do that beyond professionalizing and creating more trust and getting consistency? It's giving them money. So getting there on day 1.
Yeah,
day 0, essentially.
Mundi for India.
Exactly.
Have we seen one or not yet?
Exactly. We have not yet seen a Mundi for India, unfortunately. So if it's out there and you're listening, please do let us know. But we have seen some of these buy now, pay later groups come in. Of Business is one, speaking of trust, that they really spend a lot of their equity on. Mintify is another. But basically, we invested in Slope, which is mostly LATAM, buy now, pay later for B2B. That's a no-brainer, and that can, again, happen for different verticals. And speaking of, the vertical SaaS piece is something that provides more of a tailored offering, like CreditTail is doing for powering finance for SMEs.
I'd say the macro is probably really tough for this vertical specifically right now, like getting credit lines, dealing with people's credit risk, et cetera. So probably not the business I would go and build right now because it's going to be so hard to actually get access to credit. But I do think ultimately it's a huge opportunity.
Yep. And I think that brings me to another point is kind of, Reserve Bank has been fairly hawkish on new banking licenses. And so I think the way that we're going to play that piece is, looking for folks that have less dependence on regulatory environment. We've seen some companies come in, say they're going to start as a credit lender. They get big enough and eventually get a license, and before that they have a partner. But that's a little bit harder of a way to play it. One thing that's quite cool that I'm looking forward to innovation coming off of is some new guidelines that were just released for auto debit. So what does that mean? Before, you couldn't debit using UPI for subscriptions and recurring payments. Well, now you can do that for insurance premiums, for rent, for utility bills, for investing in something, you name it, you can do it, which will be, I think, really quite cool. And then just more broadly, this is kind of a broad stroke statement, is data plays, where, of course, with the accessibility of this data and alternative data to that point, start to use that and help to figure out what's a way that I can finance some of these micro SMBs, much like we're seeing in Latin America.
Do you have a slide with a few of the,
Yep. Sorry, it delayed on me. So this is kind of, again, some of that segmenting. And I think one that I want to focus on maybe before you comment, Fabrice, is the payments as a service piece. So Modern Treasury is a model that we looked at. Really cool automated payment ops and kind of an end-to-end platform therein. We just invested in a business called Ledge, which is doing something with a little bit of a twist. And so looking for more of these kinds of players. You'll see in the middle here, access to capital with Velocity, which we actually already have invested in. And then to Fabrice's point a slide ago with Mundi here on the bottom left.
Didn't we see a few Brex for India, for instance, already? Or did we just look for them?
We did. We saw actually quite a proliferation of them coming out of probably YC last year. That was their summer YC. I think we saw 5, 6, 7 at least, just India specific. as well as some players that were doing a MENA play and India, or they were doing Southeast Asia and India, didn't either get to conviction or price was not in line with where our reality was. So those are good ones to come and revisit, and a lot of strong players.
So still very early, in all the categories.
Still early.
Right. When do you have PIX or UPI equivalent for payments? Why is there still a payment as a service opportunity? Isn't that the payment solution?
Well, so you have the payment solution, but you don't have all of the pieces around it, right? So you could say, look, for my user base, I'm going to help you to better understand how to lend. Or for you, based on, we've seen it with Slope, or we've seen it with OatFi, which is another one that we didn't invest in. When I look at AR and AP together, I've got a new profile for how I'm viewing the individual and how I'm viewing the SMB and how I'm viewing the enterprise. So I think there's a lot of applications leveraging the data and saying, look, I'm not going to take a rate on you because UPI has effectively made that not essential or not required. But what I will do is look a little bit further, look a little bit deeper, and leverage what the government's already providing me with for free.
Okay. Makes sense.
Yeah. Okay, cool. So this kind of leads us to this last trend that's built upon the other two, which is the B2B Marketplaces side. And so I'm looking at this as like the way to unlock the gate, so to speak, of the global pricing power on a net new basis, or how we look at things going forward. And so to me, SaaS-enabled marketplaces are going to be the things that drive export. We've talked about this a little bit with professionalizing the SMB. And so typically we'll probably look for take rate models. Reason being is, yes, there are, call it 40 million SMBs, but when you look at each vertical, if you were to charge a very small SaaS fee given willingness to pay, you couldn't possibly build a unicorn company. And so take rate becomes very important. And of course, always nuance there, SaaS enabled versus market pick versus managed. But we'll see different players and from that perspective. The best players, we posit, will take kind of the reins on logistics, because that will help with tracking of shipments and trust. And there's some really interesting data out there on like how much you see goods kind of lost from a tracking perspective, or somebody does a return and you can't tell where it is. And that's a pure loss to the bottom line. And so trust it being key, not just from a quality perspective, but from a tracking perspective.
Yeah, no, I think that's why it's going to be two things. A, curation of the supply, which is what you pointed out, because trust matters, and probably playing a role in end fulfillment to make sure that you see things through, basically.
100%. And so, further sticky companies are going to handle financing. We've seen this time and time again. And then other unique value-added services. I think I've talked about trust enough, but AOVs is another reason why we're so excited about B2B is, in India categorically, AOVs are definitely lower, but even so, B2B way outpaces B2C and super, super fragmented. So this is our bread and butter. And then one thing that's just kind of interesting to note is avoiding those that sell only domestically to start. So I think our normal advice to founders is like, don't go too wide. You shouldn't be in too many countries at once, and you have to do that. It's not a red flag here. It's not too wide of scope. You have to do it.
But probably do one corridor, right? Like you do U.S.,
right?
India, U.S.
Correct.
You probably don't do
Correct.
Globally.
Yeah, you don't do MENA and U.S. and Europe all at the same time. You do U.S. most likely first. I've seen some folks going UAE, but yeah, it depends.
We have Ashish asking or saying that there seems to be a following of trends by VCs. He's like, in the last 8 months, the investment trends I've seen changing every 2 months. Marketplace, agri-tech, deep tech, metaverse. Why are they changing their focus that often? Or is this question? Interesting.
I wonder if it's firm over firm, or if it's just what's kind of the hot topic. We always experience what is the hot topic. Right now, food models seemingly out of rapport. But call it 2 years ago during the height of the pandemic, people were like, great, the easier it is for me to get food to consumers, the better. I'm in. So I think that's probably part of it with our thesis and with what we've done historically, is one, look at what's going on from a global perspective, but two, stay very consistent in terms of some of our underlying ways we invest. Like, we've continued to look for verticals. We've seen that marketplace pick works very well. We've seen that the transactional models work, very, very well. And so we've surely looked at flavors or macro trends too, but I think try to rein in the hey, I'm excited because everybody else is excited.
Yeah, we FOMO doesn't drive us very much. So you want to be contrarian typically. If everyone else is running in that direction, you probably want to be running in the other direction.
Right. If everybody else is pulling out of India, like, I'm all in. This is great. Yeah. And to do a similar exercise here, I mentioned chemicals. Node is an investment that we placed quite some time ago now and has been super, super successful. Red Sky is an example of a newer one where they're looking at bulk foods, particularly in cold storage. You've seen some services models work out extraordinarily well, like a rescue. And then we've seen, the Frubana model pretty much everywhere, including India. So I think a lot of these models, it's just a total no-brainer for it to exist. And it's a matter of finding, the right partner to invest in.
Yeah, so to be clear, these are, again, all the global models we've invested in these. We think they should exist in India. If you want to go and build them, let us know. And we can partner on it.
Right.
We know the categories very well.
Exactly. And so to wrap up a little bit here, basically, there's a ton of money on the sidelines, which has already been pointed out, given so many funds raised last year, and especially India specifically. At the same time, call it last 6 months, we've seen less founders going to market with brand new companies. So much so that I think that means valuations have stayed high or skyrocketed for quality companies or really good founder market fit. And in the long run, though,
and that's despite macro, right?
Like,
despite the general pullback,
despite
valuations have remained really high, and so we've remained disciplined. Obviously, it has to be fair on nothing's cheap in tech, but fair on a risk-adjusted basis. And we wait until traction and valuation are in line. With what we feel is fair in the market. I mean, it can't be that Indian valuations should be 2x higher than the U.S. valuations until that adjusts. We're staying very disciplined.
Right, and I think it will normalize, and we're always more than willing to have the conversation. Say, look, when things get more expensive because the traction's proven it, fine, we'll pay up. That's okay.
Yeah. So the way we work in India is really worth highlighting is we partner. I mean, again, we don't lead, we don't price, we don't take board seats. We're still the value-added, friendly co-investor who often has seen the models around the world and can bring insights on how they should play out in India in light of that. And the people we work with, probably the closest, I guess, very early Utsaf at iFund, which we're LPs in, and we share a lot of deal flow together. And as the companies mature, we co-invest with like Sequoia India, Excel, Nexus. Any others we work closely with in India?
Yeah, I would say 314 is another one that we work closely with. Bloom, there's Shiva, who we've also invested in. He's another small fund. And so I think what's really nice is you get people that you can trust and work with, and they know what you're looking for quite well. And that helps to have an edge.
So when's your next trip to India?
Next trip, so it's not officially on the books, but it's going to be March of next year. Unfortunate situation of too many friends getting married this year and other travel. Just got back from Berlin, which was fantastic with the Marketplaces conference. So coming back, and please do reach out, regardless of if you're raising now or just want to chat when I am in town. I'll probably do the same circuit of all the major cities.
Okay, so basically, if you want to reach out to Luke, it's luke@fjlabs.com. Send him Indian deals, and if you want to meet him while he's in India in March, let him know. Or if you're coming through New York, let him know as well.
Yeah, 100%.
Anything we didn't cover or didn't discuss, anything we should have touched upon?
No, I think we were able to get through quite a lot of content quite quickly. I think for me, it's one of those things where we have just an extraordinary opportunity. It's a matter of finding the right folks to partner with, and we're very clear in terms of what we're looking for. Because of that, it helps us to more actively search and destroy versus be super reactive to what the market brings us.
Okay, I guess the summary would be we're super bullish on the Indian tech ecosystem. Yeah, we're super bullish on the opportunity and the future, where the future holds in India, and we're looking forward to being and playing a large part in helping it come together and making it bigger. So, tech founders of India, reach out. Okay, thank you, Luke.
Okay, all right, thanks for having me.
So everyone, I'll see you in 2 weeks. I'm in San Francisco next week for Masters of Scale. We're going to do the Indian Fintech ecosystem, continuing our trends of India. So talk to you then. Bye.